Welcome on board Dipan Mehta as well and figure out what he's making of the market construct right now. Dipan, hi, morning. Good to have you on the show as always. We were just chatting about in the studio as to how just everything is working for India. I mean, you've got the global construct, which is fairly supportive. FIIs have made a comeback. Retail participation continues as is. And now you've got crude acting as a tailwind too, sub 70 already.
Good morning, and it's really is a good morning. Thank you for having me on your show. And you're right. I think these are beyond blue sky scenarios. And in my whatever 3 decades in the market, I haven't seen this kind of a bull market where so much of liquidity is coming through. That too through structurally sound institutions like the mutual fund, and the regulatory environment also is pretty strong, so we don't have any major pockets of overheating or any scams or scandals happening. At the same time, settlements are taking place smoothly. Also, the leverage levels in the markets are low, as can be seen from the margin trade funding reports and what is the open interest in the futures market. So this is really, I think, a culmination of several positive factors, and that's reflected in the higher P multiples that we are ascribing to our stocks at this point of time. I also haven't seen such high P multiples also in this market. So these are interesting times, and we must just enjoy the sun and make hay while the sun shines. That's all I can say.
Absolutely. But would you also recommend taking some profits off the table?
Well, that phase also is gone. We have advised and have taken some profits off the table, but as traders, as investors, cannot be 100% in cash. Whatever is comfortable cash levels, I think we and a lot of other investors are sitting on those cash levels, waiting for a correction. Even if it doesn't come, that cash is strategic, and at some point of time, some ideas will come through. What I've also noticed is that stock by stock, there is a correction taking place. A lot of stocks have come off by 15, 20, 25% from their tops. And at some point of time, you may get a good idea which you may want to deploy your cash. Even if that doesn't happen, I think existing holdings are doing so well that they are easily covering the zero returns you get on cash if you are benchmarking yourself against Nifty or even the mid cap index. So I don't think there is a panic, at least at our end, to invest whatever surplus cash we are sitting on. And I think ideas will come through. The IPO market is so vibrant, and we have seen some fantastic listings in the last couple of years or so. A lot of those companies would have a 1.5 year trading track record. Two, three corporate numbers also would be out. I think a few ideas can come through over there as well.
Okay, that's interesting. Also wanted to get in your take then on the entire hospitality space, and in particular, Dipan, the fact that you've also seen Indian Hotels, which has, got the first hotel company to enter the 1 lakh crore market cap club. How would you look at its growth versus some of its peers? What do you believe are some of the factors that have, helped it grow to this level? And what's the outlook within the entire hospitality space as to where you're seeing comfort?
No, I think travel tourism, we're very positive on that particular industry and investment theme. And there are many companies, it's not just hotels, but even airline company Indigo has been one of our favorites. Disclosure, we and our clients are invested in it. Fantastic company, great growth dynamics, good secular momentum behind it. As is the case with Indian hotels as well, trying to follow asset light business model, which will improve the return ratios, and that's reflected in the higher P multiple. There are niche plays also like Dreamfolks, BLS, which does visa processing. So there are a whole, gamut of companies in the technology space. There is rate gain. So I think that that's an investment theme or industry worth being overweight on. We are clearly seeing that this Generation Z, is very positive on travel. A lot of them are taking 2 to 3 trips abroad every year, and so many weekend trips are also being taken. And end of the day, building a tourism and travel infrastructure, hotel infrastructure takes a lot of time. So I think these hotel companies are in a sweet spot at this point of time. And I certainly feel that the prospect for the next 2, 3 years are exceptionally good for hospitality companies. Also, marriages are becoming bigger and bigger, and that's a huge source of revenues for them. And fresh capacity coming up in the hotel industry is still some time away. I think it is lagging demand. So from that point of view, I think the industry has great dynamics, but better to stick with the market leader There is one dark horse though, which is Mahindra Holidays, another company we and our clients are invested in. And that's not performed, I think, to its full potential, but it's a very interesting company. And there also, I think, growth rate should start to pick up pretty much soon. And they have a fabulous sort of network of resource, which is a great asset. I think it's underutilized.
It's way to that 1 lakh crore mark, and that's the overall view coming in on the entire space as a whole. But curious to get in your take as well on some of those crude oil beneficiaries dropping below $70 a barrel. That's the lowest that we've seen since December 2021. What's the outlook as to what this could mean for some of the tire companies, specialty companies, lubricant manufacturers, etc.? Dipan,
Is that question directed to me?
Yes, crude
Oh,
beneficiaries.
sorry, I just missed that. No, of course, I think crude is this crude coming off the way, it has very positive news. And rather than focusing on the beneficiaries, I think it will make India's inflation fighting far easier and may make a case for lower interest rates as well. And that will benefit the entire industry and the entire economy. And of course, I think some of the companies will benefit from lower crude oil prices. It's a no-brainer. But I wouldn't just buy a company because it benefits from low crude oil prices. I'd rather focus on the fact that it is improving the Indian economy. It will reduce the pressure on the Indian rupee as well. And all of these things are positive factors. And we started this show by talking about all the positive factors. And this is one of the most important ones as well. And India is a net importer of crude and other commodities. And not just crude, I think we are seeing across the board decline in commodity prices. And that will, give an impetus to the corporate earnings, which have been kind of stagnating, or at least we are seeing that there is some amount of slowdown in the growth rates. Call it base effect, call it mild slowdown, or mild demand, kind of a slowdown in the demand, one may say. But certainly lower commodity prices will benefit a whole host of industries to boost their sales, right from FMCG to tires to chemical companies, adhesive companies, you name it, I think. And lower commodity prices will benefit engineering companies, automobile companies, auto ancillary. So I think lower commodity prices will certainly go a long way in at least keeping the momentum of the earnings going within the entire economy, which is also needed because we are seeing some red flags over there.
Then I'm just thinking through the market and I'm just asking myself that what else? Crude is down, FIs have turned net buyers, Fed has pivoted in terms of a rate cut, DIs are buying the market. This is like a picture perfect scenario, right? Like they say in Hindi, Sone pe suhaga. Crude is down, flows are strong, Fed is pivoting, and emerging markets are coming back.
Yes, absolutely. I think, and really, you can't make a case out for a bear market or even a correction for that matter. I mean, what is the scenario under which this market can correct by 10-15%? I don't see it because the liquidity flows are extremely strong, and that's driving stock prices up. I would say that supply is still constrained. New paper is still not enough to match the appetite for good quality stocks. So we are in this situation in which we are, and we are going to see higher and higher values going ahead. Only hope one can hope is that earnings momentum remains pretty intact, because at some point of time, if earnings start to flag, then you really have a big problem on your hands in terms of valuation. Right now, they are bordering on overpriced zone. Some pockets may be slightly more overpriced than others, but you don't want the entire market to be in that zone of where there is a lot of froth and valuations are just unsustainable.
What is interesting here is that while we can look at the Nifty and say all-time high, but look at defense stocks, look at railways, look at even power stocks. I'm talking about, let's say, IRDA. So let's look at some of these stocks here. Just the one, how much they've fallen from the 52-week high. So Kunal, let's do that. IRDA down 33%.
Yeah, I think from 310 was the high and 220 or something was the low.
Okay. HAL, that is Hindustan Aeronautics, 5800 has become 4600.
Absolutely, yes.
Kochi Shipyard, 25-30% fall.
Correct.
So we have a fantastic sectoral rotation which is here. the most performing sector, which is the PSU space, that already has corrected. And when you correct more than 20%, you are in a bear market. So I don't want to use the word bear market for PSU stocks, but technically the zing and the momentum has reversed.
Yeah, the best word is zing and momentum is out for these stocks.
And Dipan Mehta, we may look at the Nifty and say we are in and around an all-time high, but frankly, if I look at the side action in some of the sectors, the sectoral rotation has started. FMCG has popped right back up. We've not realized it, but defense stocks, PSU stocks, not all of them, but some of them have corrected 15 to 20% already.
Yeah, well, that's the beauty of a bull market, no, Nikunj. The leadership keeps on changing, and that provides new ideas, new opportunities to churn your portfolio, new counters for traders to focus on, and it keeps that's what is keeping the liquidity coming into the market. And that's more liquidity begets more liquidity because you've already invested money, you are sitting on profit, gives you more confidence to invest even more, and it gives a lot of choices to investors as well. I would always be suspect of a market or a bull market where just one set of stocks are doing well. We don't want a repeat of 2000, what we saw, where it was just the software companies which were rallying, or that 2004 to 2007 was just infrastructure and power companies which are doing the heavy lifting. This is a more, I would say, mature bull market where we are seeing changes taking place in the leadership sector from time to time, and stocks which are down, they tend to come back. So it maybe started with the banks, then went to defense, went to PSU. We had specialty chemicals at some point of time, and then hotels, hospitalities did well. So I think everybody's getting a chance. And what that does, Nikunj, is that eventually investors' portfolio returns remain pretty healthy in a scenario like this, because at some point of time, some stock of yours, if it is down, there are a few others which are performing. And that only goes towards increasing your conviction towards equity.
The view on the reality on the street is, and I know you've mentioned auto sub, but I want to revisit it because I see a disconnect here. The reality on the ground is that auto discounts have come back. The waiting periods which were running into years became months, and now it is almost you can get a car in a single day. But if I look at what the general brokerage opinion is and where the stock prices are, markets are not bothered about the ground reality. So will markets get it right, or the reality will haunt us?
Reality will prevail. Markets are slaves of earnings, and one should anticipate lower quarterly earnings, maybe not September, but December and March quarter can be very challenging for these companies. But commodity prices also are coming off. That gives them some leeway to increase discounts. At the same time, it's a cyclical business as well, so there's a mild cyclicality. It can certainly pick up, a few months down the line. Then there's the interest rate possibility of a cut over there. Easier liquidity could reduce overall cost of ownership. Lower petrol prices, if that comes through, that will benefit the auto industry. So look, auto is like a multi-year secular growth industry. And we could expect, a few quarters of downbeat sales. But end of the day, given the demographics, given the low penetration levels, given the fact that a lot of new models do keep on coming from time to time, which do drive growth. Also, there's the entire premiumization trend which takes place in the auto industry. There are many long-term growth drivers. And from an investor's perspective, like we have shares of many companies, right from Bajaj Auto, Eicher Motors, Maruti, M&M. Just because a few months of softer sales does not mean that you want to exit these counters. These have been great long-term wealth creators. And going forward also, I think after this little bit of demand bump is over and done with, they can again go back to that high single-digit type of volume growth, double-digit type of revenue growth because of higher realization. That particular assumption, I think, is still intact. But I think it's better to manage your expectation that you could expect one or two soft quarters for the auto industry, and there could be a correction over there. If you're too overweight, you could look at liquidating a little bit, but I wouldn't exit the sector just because there are a few soft months of vehicle sales.
Dipan, I must compliment you on the backdrop here. I know it's not a zoom, it is not a screenshot. Very nicely curated archetypes and everything in your house. Dipan Mehta? No, I'm just saying that this time you're joining perhaps from a different location. So I can see that there are very nicely curated, handicrafts and other things at the backdrop. This is a house or drawing room?
No, it's my house. Thank you, Nikhil. Can I just request your producer to increase the volume for me? I'm not able to hear you very clearly.
I think my volume is low. I shall have a sip of coffee and then perhaps garmahat aa jayegi awaaz mein. Okay. Duresh, you can hear me?
Many reasons for that.
Yeah.
Many reasons for that. Yeah.
Okay.
We are in a lovely morning over here. India has had a great monsoon. We are in a festive season. We have seen, Ganpati in Mumbai at a newer scale, increased faith. So I think, we live in very, very interesting and excellent times. I think let's just savor this moment, I would say.
Okay, the stock which I want to discuss with our experts is now Paytm. Look at the surge in Paytm. 450 has now become 650. And it has gone back almost to the levels where the RBI restrictions came out. I think it was 31st Jan, just check the date. Budget day, right? Budget morning, and suddenly you're preparing for budget and here comes the RBI
mid of
notice.
Feb is where the stock had made 330, 340.
Yeah, so the news I think came on 30th of Jan and 31st was budget and that date reacted, right?
Yes.
Correct. So from 31st of Jan, the levels in a sense for Paytm have almost come back. 700 was 710, 720.
Correct.
Almost come back there. So Dipan Mehta, for Paytm, it's a full circle. The stock has almost retraced whatever it lost after the RBI restrictions. And you were one among the few who you said that you will keep your faith. You need courage, Dipan, when the stock goes from 700 to 350 and not to sell.
Yeah, because Paytm is the type of stock that love it, hate it, but you can't ignore it. And it's always in the news. Although they take a few knocks, underlying they keep on continuing their good work in terms of increasing the subscriber base, providing more services, focusing on other revenue streams which can grow. So they are following their path. And one could say that whatever could go wrong has gone wrong with Paytm. Some say it's now it's an acquisition target also, and that could be in a completely different trajectory for the stock. And investors are looking for differentiated business models. They're looking for companies which can, grow much, much faster than the industry, which have a kind of a status, wouldn't say monopolistic status, but a clear edge over their competition. And Paytm certainly is one of those companies. And with every passing quarter, I think, forget about the fact that, they have been hit by regulation and those particular revenue streams may have got impacted. But the core business of payments, of distribution of financial products, of loan origination, that chugs along, and it grows quarter on quarter, year on year in a healthy growth rate. At the same time, they're very much focused on their costs as well. And at some point of time, this company can come solid into profit. I think we have seen that in Zomato as well, 2-3 years ago, we were all scratching our heads and wondering when will Zomato food delivery business come into profitability, and look, they've already reached that particular level. Now we are talking when Blinkit will break even and start going solid into profit. So now there is certain visibility over there as well. I think similarly things will play out for Paytm as well. And I think a lot of the new generation companies, they have taken a while, the market has taken a while to understand them. They also have taken a while to understand their investors and what their expectations are. But now we are seeing a meeting of expectations. Strategies are being changed accordingly. Look at the way Policy Bazaar has done since listing. It also had a very, I would say, volatile period the last few months or so. But now investors are recognizing those business models, and these new age companies, they clearly have a very strong edge, which is a moat, which is very difficult to replicate. And some investors prefer to have a long-term view, 5-year, 10-year view. Who knows where Paytm could be? I think if they keep on going at the same pace, they could be a huge behemoth, and something on the lines of Bajaj Finance, what is there just now. So we're looking at those kind of scenarios as well. It's just that you need to keep faith and you need to remain invested for a long period of time.
If you like this video, then like, share and subscribe to ET Now.